Hi everyone, I will be discussing the S&P 500, the NASDAQ, the Russell 2000, MVIS, GME, CLOV, Apple, and we'll talk about the 30-year bonds as that'll be important to kind of see what the interest rates are going to do this week. Overall, we can see that the S&P 500 is in a bullish channel. If we get above here, it's bullish, more bullish, but it has a lot of support here. So this trend line and this trend line and over here, and it's above the 50 moving average, which could also offer us support. So lots of support here. So my bias is for sure that we are still in a bull market, despite what the media might tell you, what there might be a lot of fear and anxiety when you talk to your friends or other people, and everybody is saying the markets are at all-time high. Evidence shows that we're still in a bull market, and we're not at all thinking about moving lower because a lot of support is in place. If we kind of break this support, then we can look at kind of going on the downside. But for now, we're in an uptrend, and you have to kind of trade in that trend. Going into the NASDAQ, we can see that despite the strong tech earnings, this is still going sideways. The NASDAQ didn't really make an all-time high when Apple, Amazon, Google reported, even though they blew out their earnings. Overall, we're in this bullish channel. If we're, above these channel lines, so the support is here and here as well, and the 50-day moving average is another layer of support. So if we're above this, then I would say we're bullish with a target of 14.833 around there. And for the S&P, the target that we have is so I would say it is the around 4,500. This is the fib retracements in the great financial crisis. So we're headed up there, kind of a matter of when. Okay, so the Russell 2000, this is IWM. We can kind of see that it's moving sideways. I personally wouldn't get involved in this because it's still consolidating. Once we get above this channel, we can kind of look at long positions with a target of 25.30. But overall, this has made a really good uptrend since October, and since really, end of October, beginning of November here. And it's got a layer, it's above the 50-day moving average, so that's support, and also it's above these bullish channels. Moving on to MVIS, we can see that this stock has came down to this trend line, and it's acting as support. So and the 50 moving average is also offering resistance. So for this one, I would say you can, if it moves above the 50-day moving average, you can get long, and you can look to take profits here at 1720, 17ish, or you can kind of get take profits at 2234. That's where I would be looking to take profits, and then if we're above that, then you can go to the next target. If this breaks down from this trend line, then we're looking at $10 a share for MVIS. Let's look at GME. So this is a beautiful triangular consolidating pattern. We see that we're above the 50-day moving average, which is great. It's kind of been hovering around, supported around 173-ish. It's above this kind of upward trend line. So this is, I have a bullish bias for this simply because of this chart pattern, not because of all the hype and all that, all the news and all that, whatever, Melvin Capital stuff. Like, to me, I'm indifferent whether there's a short squeeze or whatever. It doesn't really matter. It's what the chart is telling me, and the chart is telling me your risk is pretty well defined. You got a pretty good support here at 173. You got the 50-day moving average, which is pretty good support, and also this trend line. So if you're below this, then you can quickly take your loss. This is a very volatile stock, so you can lose 20% of your money pretty easily. But you can kind of exit your position once these supports break. But if we kind of get above this 200 level, then the next level is 283. So your risk reward is well set up. So I would be bullish on the stock from here until we get lower here. Then I would exit. Clover Health, we can see that it's kind of broken this downtrend. It has a lot of, it hit resistance here at 1160. It has a lot of resistance. This is the 200-day moving average. Right now it's here. It's kind of in support. But if it wants to move higher, it's got a lot of fighting to do. It's got to get above the 200-day. Then it's got to get above this key level. If it gets above this key level, yeah, you can take this long till 13 or even $17 a share-ish. But this is a lot of work to do. And to me, it might kind of come down here around $9 again before going up, or it might test the 50-day moving average. So for now, Clover Health is a no for me, because I won't be taking any positions in it because there's just so much resistance here. Apple, great company, but they've added like $1 trillion in market cap over the past year or even more. So even though they destroyed their earnings here, it still moved lower. I wouldn't get involved in Apple right now. It's still consolidating sideways. It's above the 50-day moving average, which is pretty bullish, but if it's above 173, then I'll get involved and I'll be looking to take it up to here. And then once this breaks, to be honest, this will probably break, and then we're kind of just off to the races here. But until it kind of gets out of this kind of sideways consolidating pattern, I'm not gonna get involved with Apple. Let's look at the 30-year bond. We can see the trend is lower, which means interest rates are rising, which gets at the whole theme of inflation. Everybody thinks there's going to be inflation, and the Fed is going to raise rates. That's what kind of the fears are, and that's what everybody's concerned about. We can kind of see here that all the penny stocks kind of fell here, all the SPACs fell here, and we had this relief rally. So the tech got to recover, some penny stocks got to recover a little bit, but now we're kind of falling out of that relief rally in bonds, and interest rates are again moving higher. So for me, if we go to the daily here, this is below its 50-day moving average. There's some support down here ish, which, if you can see, it kind of got rejected there. But overall, for bonds to move higher, it's got to get past the 50-day, and then there's resistance here, and it's got to get back into this channel, which there's a lot of resistance to get through. So the path of least resistance is down. I think rates are probably going to move higher. So that might put pressure on the NASDAQ and some penny stocks. But again, don't trade the NASDAQ or the penny stocks based on bonds. Just look at the individual market and look at the individual stocks and trade the chart and trade the price. So that's it for today. Thank you for watching, and we'll see you guys next time. Cheers.